Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 20th of August, 2022, and it's the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the 4th week of August. And across these three major pairs, you can see that they've been falling back down lower. And all three are correlated, which means that likely the US dollar has climbed back up and rallied higher. And this is also similar to what happened to spot gold. If you check out my other video. And dollar yen has also climbed back up. So let's begin with the euro. And it did start falling right from the Monday, but pause for the next couple of days, just pulling back to retest the lower trend line of the channel before falling further on Thursday and Friday. So right from the Monday, there was no critical news, but it had already fallen, just like the precious metal spot gold as well. When attempted to retest the breakout level at the trend line, and Thursday was actually on Wednesday there was already US news, but Thursday continued lower with after the FOMC meeting minutes was released on late on Wednesday, where the Fed is still going to continue to increase rates until there's a significant decrease in the inflation rate. And also on Thursday, there was the further news on the manufacturing index, where it continued. There was a surprise in the figure, and this triggered further weakness in the other major pairs, and then it continued further on the Friday, and looks like there could be further bearish continuation move on for next week, right into the key round figure psychological level at 1, which we had been highlighting last week as well. If there's a breakthrough these levels, so it closed already below the 101 on Thursday at the 21 FIB retracement, and then follow through on the Friday. So it is at a very precarious level now. It's likely going to test the round figure at 1, and whether it's going to test this lows for the year so far. It's after a retracement back up into the 62 FIB retracement level, and then blocked by the daily 55 as well, and a previous swing low. So we may need to flip this over to find a bearish continuation move. And if it drops further lower, then it could head down into 97.00 as well. All right, but it needs to break this low for the year at 99.50, and at least test the 99 round figure first. So let's move this. There's a critical support at the 1 parity. This is now going to be an interim resistance. this resistance zone is definitely safe. We may be able to bring this down lower. There's a significant resistance now at 102. And if we bring this down, that's at 99. All right, we can also test and check the reversal move. It is at 78.6 retracement now. And the closest fib level below the 99 is at the 97.93, so at 98. That will be the next critical support level. But it may not get there yet so soon, but we'll see. For now, that's one is going to be a key support, and whether it's going to bounce back up from there, or at least from the swing low. And there's only minor news for the Eurozone with the flash PMIs. There will be some exposure to the US Jackson Hole Symposium on Friday, where the Fed Chair Powell is scheduled to make a speech as well. So there could be increased volatility there. Okay. Let's take a look on the weekly time frame as well. And yes, no surprise, there's the very bearish engulfing candle, taking out the 4 previous weeks of consolidation, and finally one push up into the 62 fib retracement, and then diving back down lower. So that's a very bearish move here. Okay, so we'll compare with the inverse correlation with the US dollar index, the DXY, and let's see whether that has rallied. And here's the US dollar index with all green throughout the week last week, and starting from the strong move on the Monday, right from the start of the week. So inverse correlation with the spot gold as well, where it fell straight from the Monday. And this was after the previous Friday, where it managed to find support and climbed back up above the 105 and the daily 55 EMA, above the support zone at the 78.6 retracement. So that was a critical support level, as well as the trend line. And then continued higher after a pause on the Tuesday, but yeah, from Thursday, Friday, continued right into back up into the 21 fib retracement already. So already at the 107.80 level. So very strong bullish move for last week after faltering and retracing down for the last 3 weeks. Let's expand this, and let's also take a look at the weekly time frame. And yes, you will see a very strong bullish engulfing here. And on the weekly, now we can see that the there was a bullish move after 2 attempts to find support with the wicks here and bouncing it back up as a hammer for 2 consecutive weeks, and that's the unleashing the bullish momentum last week. Get back to the daily. So we'll see how the dollar reacts now and whether it's able to push all the way back up to retest this year's high at the 109 level. That's going to be a key resistance level. Now let's change some of these to support here. It's going to be a support zone now. And this is clearly resistance. Let's move one down here to this area at 106, where it paused for a while before looking out higher. So this is going to be a key support zone. Let's make this darker here. Okay. Let's remove this channel here now. All right. So let's see whether the US news next week, some of the key news, whether there'll be any trigger to give it a further boost into the key resistance zone. And we may need to flip this Fibonacci over again. This is likely the round figure at 110. May not get there so soon, but let's mark this round figure here. It's a critical psychological resistance zone and level. Okay. Let's move back to the other pairs, the other major pairs. All right, so let's move on to the cable. And cable is even more bearish than the euro, with a test of the 118 round figure. It has already fallen back below the 120 round figure, and that was on Thursday. Broke through the support zone and fell hard also on Friday to test the 118, close slightly above that. So was unable to climb back up above the lower trend line of the triangle after falling through on a Monday. Tried to pull back on the Tuesday to retest it, but then 3 consecutive days of falling down lower. So this is now going to be resistance. In fact, a strong resistance zone. This will be an interim resistance. and we still have strong support here. We may need to flip this over to find the bearish continuation move after it had spiked through the 50 pip retracement a couple of times, unable to reach the 62 pip, and then fell back and hitting towards the recent lows, this year's lows. And the next round figure, these 116 is going to be another key support level. The 138 is further lower, so we may be able to switch to a reversal move here. Yes, and the 138 is coming up at 115.56. So this area would be a significant resistance zone. The next key support zone, sorry, not resistance. Okay, so it needs to break below this round figure first at the 118 and the 117.60 at this year's lows. And if we take a look at the weekly time frame, you can see it's very, very bearish engulfing candle here. Also taking out the previous 5 weeks here, except for the low, coming to test the low soon. All right. So yes, that's the Friday. That's the watch out for the volatility on the US Jackson Hole Symposium. There is also across all the economies on Tuesday. There's the flash manufacturing and services PMIs. Okay, so let's move on to the Aussie dollar. And the Aussie dollar did climb up higher before it did not reach the 786. It could not break the daily 200 level. And the just spiked through the 7100 before falling back hard on the Monday last week. And this is also very similar to spot gold. Pause on Tuesday, but then continued lower on the Wednesday. Let's extend this out as well. This trend line. All right. So that it could only go past the 62 pip retracement and almost reached the 786. So it was a deeper retracement higher, and then now falling back below the 38 pip retracement. And there could be some bearish momentum as well to continue to test the 21 pip retracement at the 68.00 round figure. And the year's low is down at 66.80 region. Let's take a look on the weekly time frame, and it is an engulfing candle, but it didn't take out the previous weeks, just 1 to 3 weeks worth. And so it may take a bit more work to drop further compared to the euro and the cable. Okay, so let's changes now to a support zone. So put this back to 70. Okay. This resistance zone was safe, so that can be moved down lower to 71. All right, so for the last week, the Aussie dollar did almost an identical move to spot gold due to the commodity pair correlation, and it did fall right from the start of the week on Monday. Okay, so do check out my other videos on spot gold and Aussie yen. Have a safe week and a good trading week as well, and cheers for now.